Hey, good afternoon, everybody. Still here for the Daily Market Pulse for this Thursday, February 6, 2014. We see stocks roll higher. They have essentially sort of continued the process of slowing down the selling, pausing at least temporarily, and then bouncing. Somewhat of a dead cat bounce of sorts, somewhat of a retracement, following a reasonable correction thus far. And not quite certain, quite frankly, we're going to go much higher. It may, but this has not been capitulatory in any nature. Doesn't mean it can't go higher. I've seen it before. So you just have to kind of roll with it. But right now they're going higher. There may be a little bit more room to the upside yet. And all of this, of course, right here on the eve of tomorrow's non-farm payroll as well as the unemployment numbers. So with that, let's look at charts. Okay, so Dow Jones, you can see here what we got. We had the decline, we had the Harami, we had a doji yesterday, and then the huge thrust higher, quite large, triple digits. Back into the 8 moving average, that was going to be one of the areas we said we could go to. That was a target. And as high as, of course, you see that horizontal blue line we see here, right around 15,700. Came off the lower Bollinger Band, came off somewhat of a pivot area, the 200 8 moving average, including the trend line, as you can see there as well. A little bit of a positive divergence on the stochastics. All of that was sort of pointing toward the likelihood, or at least possibility, that we could see a bounce, and we did get it. So now, how much higher will they go? Like I said, that's, I think, maybe the place to go. The 8 moving average plus that little breakdown area that we just saw on Monday. And then if it rolls over and comes back down, it's going to come back toward the lows from yesterday and today. Yesterday and the day before, on Tuesday, and then possibly break lower once again. We're looking for still, at some point I am, something that's going to be a lot more capitulatory, something that's going to be a lot more of a panic sell. We have not seen that to this degree yet. Okay, so with that, let's move on. And like the Dow, we see the S&P doing the same thing, down, sideways, doji-like formation, bounce into the 8, into the 1775 mark. If there's any more upside, it's going to be, it could be short-lived, but it could come back up toward 1810. That's still possible. That's the big change of polarity that we had a while ago. That's possible. It didn't really test that level on the way down. It went through and sliced through it and never tested on the way back up. So it might still want to do that. We'll have to wait and see if that's how that's going to work out. Obviously, if it drops back towards 1735, then we're looking much deeper. 200 8 moving average to much lower, like 1640 to 1660. Well, let's see, what is it here? Yeah, 1660, I guess. It was 1650. All right, so with that, let's move on. Okay, so here we've got the NASDAQ falling off the roof at the top, falling window. We saw it slice down into the 50-day moving average, hold there for a couple days, bounce back up, and then fall through on Monday like everything else, through the 50, through the lower Bollinger Band, into the window. Or for the last couple days prior, it's kind of paused. It had a Harami, it made a new low yesterday, like again, a little bit of a hammer-like formation. In fact, it was a hammer during the day, and it lost that title by the day's end. And then we had a bounce today back to the moving average, back to the 40-70 area, and then the 50-day moving average is still possibly in play, as is the 20, but you see the declining trends now. The 20 is rolling over, the 50 is flattening, and right now price action below key moving averages and hanging on. So it's a little bit in a wedged area below 4070 and above the round number of 4,000. So pretty critical. We'll see what they can do with this tomorrow. So if you recall, the TSX had already bounced earlier, looked much better than what the U.S. stocks were. We said that if this is all accounts of what's going to happen in the U.S. side, then we'd see the bounce, and we're seeing it now. Big bounce back into the 20, back across the 13,800 essentially, or 13,750-ish. 20-day moving average, but that's flat, kind of rolled over, so it's between the 50 and the 20 right now. So another important milestone, if you will, for the TSX. If it comes up back through that into 13.8, then it's going to shot go right back to 14,000 again going forward. Treasuries, after clearing that 134, we knew it'd probably come back to test that breakout area, including maybe a deeper retracement just because of the fibs. It had a nice move to the upside where it resided at 135. It came into 134, back through 134 to 133, and that's where it currently stands now. So into the percentage retracement, including the 200-day moving average, with a fastly rising 20. This looks like a pretty reasonable place to kind of take a pause and start maybe making a bounce back higher again. When you look at fibs on this one, go to the top where the dark cloud cover high is, and then the breakout is right here. So you're into the 618, possibly the 50% here. If you go a little bit higher, then you're already at the 50%. So it could already be done. It may have a little bit more left, but it's awfully close to where it belongs right now before the bounce back higher. Same with the Japanese yen. It come up through the 50, held above the 8 moving average right into its pivot area, if you will, up there at 99.50, pulled back into the 8 right now, including the 98 area, which is a series of highs right there just prior. That would act as a little bit of support. The 20 is now crossed over the 50, so that just strengthened the intermediate trend significantly. So this would be the place to look for the possible bounce back higher again. If not, it's going to fade right back toward 98. I'm sorry, 97. Pardon me. Yeah, 97. But right now, I think maybe for now, look for a bounce first before anything else. Gold continues sideways between 1280 and 1240. Nothing really changed here, but it's just kind of holding steady for now. Still looking like it wants to go bullish and go slamming right through 1280. Silver will be no different. Silver pushed through fairly reasonably, made a pretty decent high today, but still closed below the moving averages. But still, that's a pretty nice thrust off that bullish engulfing below a couple days prior. Still looking for that 2050 area and then possibly trying to break above that as well. Crude did fairly well today. It came off the 8 moving average, made a new high near the 200-day moving average, attempting to try to snap or at least get up to 99, which it did. Now the 20 rising and the 50 rising as well, this is threatening to really start shoving through 99 to 101 and possibly 103 again. So that looks more bullish now than it did several days ago, as this was pretty much going sideways, waiting for the confusion to end with all the moving averages crossing different directions and pointing in different directions. Now everything seems to be pointing to the upside, and probably at this point looks like it may resume upside movement. Okay, small caps did reasonably well. Made a new low yesterday. It continued on today. Not near as much advancement as we're seeing everywhere else, however. It did not make it to the 8 moving average. It did not make it to the breakdown, essentially polarity-like area where the support was across 111.50. So that could still pop and then maybe stop. We'll see if that's the case, but there's still, it looks like there could be still a little more bullishness in this yet. And then the VIX. The VIX, you're going to see here, series of highs coming down. All the trend lines are coming down. Let me do this here. Drop this down a little bit this way. There we go. So we had the push into 1819 window area. It retraced back to the 8 moving average about a week ago. Then shoved back into 19. Plowed right on through on Monday when the markets collapsed. And then the VIX went right into 21, meeting the former pivot area, before using 19 as a support area for the next couple of days, Tuesday and Wednesday. Thursday, today, the falling window fell back through that, through the 8 moving average as well, and letting, at this point, the 20, having crossed over the 50, catch up to price action at this point. Still looks like it has a chance and bullishness enough to go higher, back to 21 or more. Hence the thought also of why the markets may actually still show signs that it's still due for a capitulatory bottom, panic sell. So let's take you over to the put-call ratio. So here we have it. We have the blue line having gone kind of straight up, and it's got a little bit of a hook on it now, so it's kind of rolled over just a hint as the VIX has dropped a little bit. We see a little bit of a bounce in the SPY in the middle part of the chart, right at a polarity area, that gold line you see there. So it's right at polarity. So it'll be interesting to see what happens if this literally, maybe it gaps up with the news and then falls, or just literally falls, period. But that's kind of what might happen here. If that's the case, then we might see at that point that put-call ratio right on into 1 plus. The markets fall, make new lows, the VIX spiking even higher, and then at some point either probably doesn't usually happen on a Friday, but it can. But it usually happens earlier in the week, like a Monday, Tuesday, or Wednesday, when that bottom actually hits, and then we have the reversal. So we'll see. It could be happening very shortly or not. Well, of course, you never know. So we're just looking at what the signals are telling us and what they're trying to tell us anyway. And right now, it's awfully close to that place where it could be that panic sell location, but it's not identified itself just yet.